Good morning, traders. Welcome to Beyond Profile. Today is Tuesday. It is May 10th, and we have a market that's higher than yesterday's close. But if we take a look at the daily chart, we're still in what I would consider a stage 3, threatening to possibly go back to the prior highs here. If we look at the daily chart, you have a balanced trading area for the last 3 to 4 sessions. Today should be crucial for us if we start to break up over 52.5. First time into 52.5 actually is a naked point of control in the daily time frame that we can look to possibly sell into it responsively first time, but then watch how it pulls away. Now if you look at the weekly profile monthly in development here, 43s we were talking about yesterday. We didn't close above it, but we did in the overnight. So now we have a foundation underneath us in the S&P market. So this is looking higher, and once we clear 5250, we're back on our way back to the highs of the year. There's really nothing here at the moment that's going to stop us. Remember last week, the 27s, how strong that was? The 43s are going to start to build out the same way that the 27s were last week for us. Let's take a look at the NASDAQ. All the equity markets looking the same here this morning. They're a little bit higher. The NASDAQ market, you can see same similar situation of 3 days, 4 days of consolidation. Now breaking back to the top side here. We're pushing on 2400 this morning, the whole number. As we have acceptance of value pre-market here before the market opens. Still got an hour and a half to go, so there's a lot of time yet. But the market's definitely higher after yesterday's choppy session back and forth, and then closed back down towards the midpoint, if you will, of the trading day. Take a look at the volume profile. It looks like 93s to 79 area. Very strong volume areas. And if you look at the profile so far for the month, it's very well balanced. So we've got an acceptance, if you will, of value up at this area. We can just draw a rectangle box around it, and we can say that the market is finding value in this area here from this last low here, where the NASDAQ was found to be an unfair low at 62, 63 area, and of course the highs back at 2417. Looking at the two charts between the S&P and the NASDAQ actually looks like now it has a little bit more relative strength because it's coming back up quicker to the prior highs here, and it really doesn't have much in the way of any supply. If you remember right, this was kind of lagging behind the rest of the markets. It's definitely playing catch up now here a little bit quicker. So we'll be looking for markets that are higher today. Any pullbacks into yesterday's value areas, obviously we'll be looking at it as being a buying opportunity because the market is higher this morning. And the economic data this morning, import prices in about a half an hour. Other than that, there's not too much on the calendar. All right, folks. Let's take one more look at an equity. Let's look at let's look at the euro here this morning, just to see where that's at. The euro, you can see that it was in a free fall. Obviously, the last few days we've been talking about. It came right down to a significant volume node here, 42.73, and you'll notice that we have several bottoming tails here. In the euro, almost looking like we have again a short-term bounce coming here. You can see the prior volume node above us would be 4,500, the whole number. So there's a couple 100-point bounce that this can see here before it actually runs back into a prior area. We could actually draw a line here and do a COP, a change of polarity area that was once resistance up here. This will act as an area of supply on the way back up again because it did break through it. Plus we have the volume node at 4,500. So any move here, looking for a move back to the whole number 4,500 on the euro. All right, on the euro. So looking for a bounce in that over the next couple sessions here also. All right, folks, have a good trading day, and we'll see you in the trading room.